wife just brought me some water, so I'm ready for the dry throat. All right, everybody. So good day. Again, my name is Dave Wise, and I'm with Rightline, and I have a system called the SPY Super System software that runs on Thinkorswim. We'll talk about. You do not have to trade on Thinkorswim, and I trade on Tradier, as a matter of fact. But this identifies when institutions are in the trade. This is a very key portion of how we're consistently profitable. And I'll show you the results that we've had, and I think you see that the results obviously indicate that we're doing something right. So again, good day, and let's go ahead and get started. First thing I've got to do, of course, is a disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Rightline Trading are licensed financial advisors, so we won't be giving financial advice. Okay, if you have any questions along the way, by the way, just put them in the question box. If I can't answer them, if you put your name and phone number, or it's not Skype anymore, your Teams username in the chat box, Rory from Rightline will give you a call back and answer any questions you might have regarding anything technical that I didn't cover, or anything about the subscriptions that we will talk about at the end of the broadcast that you may have some questions on. And there's his number right there if you want to call him. And I'll put this up again at the end of the presentation. All right, so I have a alert service. This is we call it the Compass SMS. Compass system is what the SPY Super System used to be called when it first started, and it's been improved, added to different indicators, things stripped out, made better, and it now it's called the SPY Super System. The results have been improved quite a bit, although it was very, very effective when we started using it. But we still call it the Compass a text alert service, although it is based on the SPY Super System. And again, this is what you get. You get SMS text alerts on your phone, right to your phone. When we send a trade out to the alert service, I'm on the alert service as well, so I can identify how long it's taking for trades to get to me. It takes about anywhere from 5 to 10 seconds to hit my phone from the time I put it into the alert service. Okay. First thing I'm going to talk about, and anybody's been here before has heard this before, but I'm going to talk about what drives the market. And this is extremely important to understand, because this is what's really going to determine whether you're a profitable trader or not. The trade in the market, it's made up of two groups: retail traders like myself and probably everybody else here, represented by these little bitty marbles, and then institutions, which are instituted by this big marble back here. The important thing to understand is when the institutions are not in a trade, and when I say not in a trade, I mean they're not in there and they're not forced to move it one way or another. You can have institutions trading against each other, but if you've got a bunch of institutions and they're pushing a trade a trade or a stock in the same direction, either up or down, that is what's forcing the market. When the institutions aren't there in any force, and it's just retail traders making up the trading at that point in time, what you get is a lot of chop and a lot of chaos. I mean, if you're in a trade with just retail traders with no institutional involvement, you're just going to be getting little gains, little losses. You're going to get chopped to bits. So we stay out of the trades when the institutions are not in them and the retail traders are. As a retail trader, when we're trading with the institutions, we're not going to take money from the institutions. We're going to take money from the retail traders. That's who we're trading against. And there's tens of millions of them around the world. All right. So the institutions are made up of investment banks such as Goldman Sachs, JP Morgan, Morgan Stanley, all the big investment banks that most everybody knows about them. It's also made up of hundreds of hedge funds. It also includes pension funds, state workers pension funds, firemen pension funds. There's hundreds of different pension funds for lots of groups, and then mutual funds, which would be T. Rowe Price, Vanguard. Those they all have billions and billions of dollars to invest and to trade. Now, it's important to understand that in investments, in the institutional tradings, basically they have two different type of desks. They have a trading desk where they actually have people that trade. Very small percentage of trades are done by those folks. Almost all of the trading now that comes out of institutions is coming out of algorithms, computerized based programs that trade. They identify specific things that they look for on a chart, whether it's technically, whether they read the news, and they trade based on that very, very quickly. If you've ever noticed when like the FOMC comes out on a Wednesday at 2 o'clock with what they're going to do for interest rates, there's a huge spike in volume, and the market either shoots way up or shoots down, and it happens at exactly 2 o'clock in 1 millisecond. There's no way you can even click your mouse quickly enough to match how fast that's moving. That's all of the algorithms pushing those trades right then. They read the news, they look for indicators on the chart, they look for things that retail traders use, and they'll try to bust them, like MACD crossovers or RSI divergences, things like that. And they write programs. There's tons of different programs looking for lots and lots of different setups. And that's why it's so difficult to be trading when you don't understand if the institutions are in the trade or not. Right. So that's important. This is what drives profitability, is knowing when the institutions are in the trade and trading with them. Right. That's really critical to understand. Now, this slide here, this is maybe seem a little off topic, but this is a blackjack table right here. This is an ace and jack of spades, which is a blackjack, and there's a couple $100 chips right over here. So you may be curious as to why I'm showing this. Well, the reason is, if you've ever talked to anybody about trading stocks or options, a lot of times people are going to say to you, it's just gambling. You can't beat the market. It's stacked against you. There's no way you can beat it. It's just like gambling. And I'm sure if you've talked to folks about trading, you've heard this before. So is trading stocks and options gambling? Well, when I was much younger, I made my living playing blackjack in casinos in Las Vegas as a card counter. A card counting system is a methodology or a method where you can track the cards as they're removed from the deck, so that you have an idea of what the remaining composition of the deck is made up of more little cards than it should, or more big cards than it should. That's basically what it boils down to. You're not keeping track of individual cards. You're keeping track of the two deuces through 7 as they're removed from the deck, and the jack, queen, kings, and aces as they're removed from the deck. And this gives you a mathematical edge, because as the little cards, as the 2 through 7s are removed from the deck, if the remaining deck consists of a lot fewer little cards than it normally would when you first start out, the advantage swings to the player, swings away from the house to the player. When there's a lot more little cards left in the deck than there normally is, then the house because it has a bigger advantage. So basically, what you do is you're tracking the cards. When the advantage swings to the player, you make bigger bets. When it swings to the house, you make minimum bets, and that's how it works. All right. So it gives you a mathematical edge over the casinos by knowing when the cards are in my favor. Now, the reason I'm bringing this up is trading stocks and options is very similar to this card counting or gambling, because without knowing what the institutions are doing, the trader has no edge. So in essence, they're gambling. Now, both playing blackjack with a card counting system and trading stocks and options both require discipline and emotional control. This is the key. You've got to have discipline and emotional control in either one of these particular methodologies. But the SPY Super System, which is the software that we use, and this is our card counting system, basically. This gives us an edge over other traders, allowing us the ability to become consistently profitable traders. All right, this is really important. The SPY Super System, in conjunction with identifying the best high probability trades, can lead to consistent profits. So the methodology is we identify if we look at a stock, we identify if the institutions are in there, and then we look at the other indicators on that stock to see if it's a high probability trade. So we go through that until we can find 1 or 2 that are the very best highest probability trades. Those are the ones we take. But this is why to me, it's similar to playing blackjack. Without a methodology and a system, it's going to be a loser. With one, it's going to be profitable for you. Okay, so in the room and on the alert service, we have a couple of rules to trade by. We trade the best and skip the rest. Imagine this: the skip the rest means don't take a trade that the institutions aren't in. And there are other reasons why you wouldn't take a trade. You know, it's too close to resistance, it's too close to support, whatever. But we only trade the best, and we skip the rest. So we don't take a lot of trades. These are high probability trades. The number of trades we take a month is not huge. You know, it's usually somewhere in the neighborhood of 25 to 40 trades in a month. Our objective is not to make trades. Our objective is to make money. This I bring up because one of the biggest problems that retail traders have is over trading. They always feel as though if they're a trader, they need to be in a trade all the time. Got to be in a trade. Can't sit there for an hour and just watch the market. I have to be in a trade. So always keep in mind that our objective is not to make trades. Our objective is to make money. That's what we're here for. Maintaining discipline is critical. Now, when I say maintaining discipline, first of all, you have to have a strategy that you know works, a methodology, a strategy that you know works. So you have to maintain discipline by learning and following that process and not become distracted by things such as somebody posts something on X, or you hear something on CNBC, whatever. Something you hear or read can distract you from maintaining your discipline, and you start wandering around trying to find other trades. This is maintaining discipline is critical. Learn and follow the process and remain patient. Patience is such a key here. Keep you from suffering from FOMO, chasing trades, etc. It's very important to remain patient. So discipline and patience, two critical elements of becoming a consistently profitable trader. Now, as a profitable trader, we need an edge over the other retail traders. And our edge is the SPY Super System software. This tells us if the institutions are in the trade. This is key. This is the main key to being profitable, knowing that when the institutions are in, they're in trade when they are, and don't trade when they're not. Trading relative strength and relative weakness. This is something, surprisingly, a lot of retail traders don't understand this. They think it's RSI. It's not RSI. All relative strength is if the SPY is moving sideways or down on a 5-minute chart, and your stock is stacking green candles. In other words, it's got relative strength to the SPY, right? Relative strength to the SPY or the Qs. So it's moving up when the SPY is going sideways or down. That gives you relative strength, and vice versa for relative weakness. It's important to understand that when you're in a trade that's got relative strength, and it's a high probability trade, it's much less likely to turn against you very quickly when the market turns against you, because it's already got relative strength. Obviously, there's institutions in there driving this, all right, and that's what helps give us an edge. We trade with the market trend if there is one. A lot of times you'll have choppy days, you don't really have a market trend, but if there is a trend, if it's a bullish trend, then you want to be long. Right now, the market's very, very bullish. So for a long-term trade, you need to be in long trades, but you can trade short or long during the day depending on what the 5-minute chart's doing. If the market's having a down day, then you can take intraday trades that are short. But right now, swing trades short are very, very difficult. And then buy near support and sell near resistance. All right, this is important. Again, this is patience. When you want to take a stock trade, you want it to come back to a support level and then bounce. And then when it bounces off there, it confirms that it's going back into the trend. That's when you want to get in. Same thing on the short side. It comes up to resistance, turns around, heads back down. You want to get in as close to support or resistance as possible, because when you do that, if the stock does go against you, your loss is going to be minimal, because you don't have to wait long to show that you were wrong. If you're chasing it way up in the morning, the stock's trading like crazy, and you're suffering from fear of missing out from FOMO, and you jump in somewhere near the high, and it reverses on you, there's no support for a long way down. You've got a really, really red P&L before you even can hit support on that. You don't want to be in those positions. Okay, I think I covered them all. Buy near support, sell near resistance, yes. All right, so the SPY system, which is the SPY Super System, which used to be called the Compass System. How this works is it identifies the highest probability setups while sidestepping setups that look good but will fail more often than they succeed. That's what we're looking for. It does this by identifying when the institutions are driving the move and when they're not. And it analyzes very complex trading data and displays it in easily identifiable visual format. And I'll show you a bunch of these charts with the SPY Super System and show you how we use colors to identify if institutions are in the trade or not. Makes it very simple to identify, even for a novice trader. For a novice trader who doesn't understand technical analysis necessarily, if I show them a SPY Super System chart and tell them what the colors mean, they can tell me whether an institution's in the trade or they're not in the trade. How are we getting an edge over retail traders? Well, we're taking trades that are being driven by the institutions. We keep saying this. This is the important thing. Trading stocks that have relative strength or weakness versus the SPY or the Qs, and trading in the direction of the overall market. If you do this, you'll be ahead of about 95% of the retail traders in the world. They just don't do it. They don't understand relative strength. They have some crazy methodologies that they'll trade. You've probably heard hundreds of thousands of them, but this is give you a big edge over other retail traders. And this gives us an edge because our trades are going to be supported by institutional buying or selling. They'll be outperforming the SPY, and they're going to be moving in the direction of the overall market, right? So that's how we have the edge over all these other retail traders out there. Okay, now the SPY super system software that I'm going to show you, I just want to emphasize, this is the critical element in finding and trading the highest probability trades. This is a piece of software I have up in the room every day. If you're in my room, you can see the software. I got it there running all the time. You can also buy it and purchase it and put it on your own Thinkorswim platform and get the same indicators that I get with all the scans, etc. But this is the software that's the engine that drives our results. Right? Got to have this. The ability to identify when institutional players are driving a bullish or bearish move and when they're absent is the key factor in pinpointing high probability trade setups. And this is the function of the SPY super system software, and it's the critical component. So when you see the results that we've gotten over the last 3.5 years, remember how we're doing this. It's not a coincidence. It's coming from having the proper information that the other retail traders don't have. All right. I do, by the way, have a YouTube feed every day at 11:30. The Right Line Trading has some YouTube feeds. I have a YouTube feed there every day at 11:30 for about an hour. If you join the YouTube feed, you'll be able to see my room. You'll hear the talk. You can ask questions just like you're in the room. It's just for an hour, just to kind of get you familiar with the setup. Okay, now I want to run through this very quickly. Most everybody that here is a retail trader. I've been doing this for a long time, and these are the most common mistakes that retail traders make. And believe me, I've made all of these. So not necessarily most critical order, but this is a very important one, not considering current market conditions. Again, if you're trading in a choppy market and you're just going to trade long or short and the market's chopping around, you're not considering the current market conditions, which means you should be trading much more heavily when the market's trending than when it's choppy. So you've got to know what the current market conditions are. If you're ignoring that, you're ignoring a very important item. Over trading, we've talked about this already. Taking way too many trades, feeling as though you need to be in a trade all the time. I mean, I know retail traders who think that they need to be in a trade every minute of the day, and they'll take 30, 40 trades in a day. It's insanity. You're just not going to be able to be consistently profitable doing that. Trading your P&L instead of your technicals. This is really important. Understanding that you should not be just looking at your P&L at all during the day or when you make a trade. When you get into a trade, when you get out of a trade, should not be based on whether you're making money or not. It should be based on what the technical setup is telling you. Is it still bullish? Just because the stock went against you a little, it doesn't mean it's not still bullish. And if people trade their P&Ls, they'll get out of trades when they go red, or they'll go out of them when they go slightly green because they were red a half an hour ago, and now they're back to even again or a little profitable, and they dump the trade. That's trading your P&L. Please don't look at your P&L when you're trading. Over leverage, too much risk. Obviously, putting too much money into any one trade. If you want to trade and you're very nervous, generally speaking, that means you've got too much money invested in. Right? You've got too much money on that trade because you're not able to stay with it if it goes against you. So that's too much risk, over leverage. Not using the daily chart for swing trades. This is a really important thing that a lot of retail traders seem to ignore. They'll look at a trade on a 5-minute chart and they'll think this looks great. So they'll go along the stock and planning on swinging it, and they had never looked at the daily chart to see that the daily chart was very bearish. So you don't go long a stock if it doesn't have a bullish daily chart. You want to have the market in your favor. Lack of patience, obviously very important. This leads to over trading. Forcing trades related to lack of patience, right? Forcing trades. If you're impatient, you justify any kind of trades you can take. I've heard all kinds of people ask them about why they took this trade, and they'll tell me, some indicator that they just put on there that nobody uses was telling them to stay in, or they thought something was going to happen. And I'm going to cover that in just 1 second. Attempting to pick tops and bottoms. Again, Tesla's too low, it can't go any lower. Microsoft's too high, it can't go any higher. You should never be trying to pick tops and bottoms. Confirmation of tops and bottoms is very critical. once you have a confirmation of it, then it's tradable, but you don't pick it at the top or the bottom, you're going to get trapped. Not waiting for confirmation to enter a trade. Again, waiting for a stock to break through resistance and not waiting to make sure that resistance is tested so that you've got a confirmation of it. And FOMO, fear of missing out. And that's obviously that's greed. This is greed. This is what's causing this. All of these areas are basically trade based on emotion. And one thing I want to cover here, trading what you think instead of what the price says. This is when I have, because so many people that went in the room, they'll tell me that they look at a trade and they'll say, what do you think of this trade? And I'll say, where'd you find this trade? And they'll tell me they heard about it on X. Somebody on CNBC mentioned it. They read about it in the paper. This is trading what you think instead of what the price says. We should only be trading what the price says. And I'm going to give you a quote here that kind of relates to this, trading what you think instead of what the price says. Remember, what the price says is this is what we trade. We're only trading what the market's doing, not what we think the market should be doing. This is a quote from Stephen Hawking. The greatest enemy of knowledge is not ignorance. It's the illusion of knowledge. When you're trading a stock that you heard about on X, or you heard about on CNBC, or you read in the paper that the market should be going into a recession, so I'm going to go short, you're basing that trade on the illusion of knowledge. It's not true. You've got any kind of indication from the market that's true. What is true is what the market's doing. The market is what we're trading. We trade what the market is telling us. That's all we trade. We don't trade based on something we think we heard or we saw, right? And that's the illusion of knowledge. And that, again, it's the greatest enemy of knowledge. It's also the greatest enemy of you making profits. Okay. I just kind of run quickly through the SPY Super System software so you can see what it looks like with the indicators identified. I'll show you a few trades, and we're going to get into Heiken-Ashi candles. This is the SPY Super System on Thinkorswim. I run it on Thinkorswim. It also runs on Ninja, but I run it on Thinkorswim. Now, you don't have to trade on Thinkorswim. You don't even have to pay for Thinkorswim. You can download the Thinkorswim platform and have the software, Rightline will load it right on your computer, and it's going to look exactly like mine. And I'll show you a live one of these today. But what you've got in here, these are the key things that we need to understand. This is the actual momentum in oscillator here. Now, this is a Laguerre, which is an oscillator. But most oscillators have they track momentum and divergence. This doesn't have there's no divergence in here. This is a straight oscillator that trades momentum only, just momentum. Now, momentum is a huge indicator of whether institutions are in the trade or not, right? This is the current time frame momentum. So this is the momentum for what's going on in whatever time frame you're on. This is 5 minutes, so this is what's happening on the current time frame. Now, these are all represented by colors. Red and yellow is bearish, blue and green is bullish. Pretty simple. You can see here we went from bearish to bullish on the 5-minute chart, but the multiple time frame, and this is 3 different time frames, what they call fractal. This is the multi-time frame. This tells you it's still bearish right here. This is a long-term trend. And so these are the ones we use. Now, when we're trading on a 5-minute basis, if we're trading as a scalper, if you're trading to trade very quickly, like futures, for example, or SPY or Qs, just for 2 or 3 5-minute candles, all you need is the current time frame momentum to tell you if the institutions are driving it or not. If you're trading a swing type trade, then you've got to look at the daily chart, then your multi-time frame momentum and current time frame momentum both need to be aligned for bullish or bearish. Red or yellow for bearish, blue or green for bullish. Very, very important. And then the long-term trend gives you additional confirmation of that particular trend. Right now, up here on the pricing portion of the chart, got a few things in here important. This is the very most important thing on a 5-minute chart, the VWAP, volume weighted average price. It shows up here in this pink line. This is something that every institution uses for entering and exiting trades. They all use this. So this, of course, becomes our support or resistance level on a 5-minute chart. You don't use it on the daily chart or anything else. You just use it on the 5. You can use it on the 15, but you don't use it on the daily chart. This is the VWAP, critical. All right. The next one is this 15 EMA right here, this little red line. That's the 15 EMA of an EMA. It's a smooth exponential moving average. It's 15 periods. This becomes also a support or resistance level once the price gets away from the VWAP that we use for entrance on a 5-minute chart. Okay, critical here. This is a pivot point, this white line. These always don't show up, but these pivot points I'm making you aware of because you'll see them on the charts, and they tend to be levels where the stock price will stop going down or stop going up. The pivot points, they're very, I don't trade off them, but I'm aware of them when I'm gonna get into a trade. If I was to get into a trade short here on the Qs, I'd be aware of this pivot point and I would be getting out of there as the price approaches that pivot point. All right, and these pop symbols right here, these blue and pink arrows, these are called pop out of the box symbols. These tell you that a stock is breaking compression to the downside right here, which makes for a good entry. That's an excellent entry right there off that 15 EMA with a pop to the downside, breaking compression to the downside with the market being bearish. And here's one to the upside, bullish compression break. All right, so those are on all the 5-minute charts and the daily charts. All right, so those are the indicators. Now, we've also added one more just recently that shows up on the 5-minute charts. It's called the market internals. These two are going to go away, but this we're using, market internals. Evolved trend down. This tells you what the overall market is doing. The whole New York Stock Exchange, all the stocks added together. It takes a look at all the volume that's moving up on stocks that are rising and all the volume on stocks that are going down. It subtracts one from the other, and it tells you whether it's trending down, trending up. Yellow would be trending down, but not terribly bearish. If it says trend down, red, and that would be very bearish. If it says trend up, blue, that's somewhat bullish. Trend up, green, very bullish. Right, so this tells you what the market internals are. And so it gives you an idea of what's happening in the overall market conditions so that you can kind of take that in comparison to the stock that you're trading. All right, so that's just an additional indicator that shows up on the new charts. All right, this was a trade I took. I just kind of want to show you some of these trades, why we take this trade. This is a daily chart. This is a daily chart at NVIDIA back from August. But this was a trade we took right here on 8/4. Now, if you look at it, you notice that the current time frame and multi-time frame are bullish all the way through here. All right, so we didn't take it here. We could have taken it here, but we had how yellow on the current time frame momentum. Then it went to blue. So it could have actually taken it there, but I didn't notice it until this pullback. So we got to move up on NVIDIA, and we're waiting for it to come back to a small level. This in the room we call a PBO. A pullback opportunity when the stock pulls back. Now you see it pull back right here, and then it bounced right off of this 15 EMA. All right, on the daily chart, we bought it right there. Everything's great. The institutions, you can see the institutions are in this heavily. We buy it here, we hold it for a couple of days, it moves sideways, and then it pops right up here, and we took 32% profit on NVIDIA. And that's a day trade. That's a swing trade. Right. This is SMR. This is another swing trade we took. Now again, look at your indicators. All right, you see how down here is how it's just going sideways. You've got mixed indicators on the daily chart. Blue and yellow, yellow and green, then blue and green, then yellow and green. Now over here, after earnings, we go from a current time frame momentum to bearish to current time frame momentum bullish. Right there, went green. This is where we took it. We picked it right here. Went on 5/13. We get out at 5/15. 2 days later. 56% profit, 2,000 invested in that trade, produced $1,170 profit. So that was again, see the institutions are in here. So that's what's driving that trade for us. This was a Tesla trade. This off a 5-minute chart, right? So we're only interested on a 5-minute chart. We're only interested in this indicator right here, right? So here's Tesla, and here's it is the first thing in the morning. You see how it goes blue right at the open. Right at the open, get a nice pop. So we're up above the VWAP right there. So as an early trade, you can take it right here because we get current market momentum is bullish. It's blue and then it switches to green. We take it here and you ride it right along the VWAP. You see the VWAP right there? As long as it stays above the VWAP, that's your stop. And then it moves up here and it starts to reverse right here. It goes red, you take your profits right there. And notice it switched back to yellow here as the institutions started to sell off. But they were buying it all the way through there. All right, and here's one in the SPY that we took. This was a nice trade here. You notice that we have going back bullish right here, but you can't go bullish when the price is below the VWAP. Here's the VWAP, the volume weighted average price. Here it pops above the VWAP right there. Notice that the institutions just switched to buying on the 5-minute chart. The institutions are in the SPY. They're buying it here. We've actually even got a pop symbol telling us compression is breaking to the upside. You take it here. and up it goes. And then it starts to compress here, and that's where you would get out. You could have stayed in it because it was still green. I would have taken profits right there. And then when it switches to yellow, of course, you've got to be out. But there is your break from bearish to bullish with a break above the VWAP. That's the perfect setup for a quick intraday trade right there. And this is Wendy's. This was a day trade. Again, see the daily. So we're looking at the current and the multi-time frame momentum on the daily. We've got to be looking at it. Here's the earnings right here, right? That we kind of move sideways. Everything goes red. We take it right here as it goes red, and we catch this move down in Wendy's. We just kept that overnight. That was a really nice trade day after earnings to the bearish side. You notice that the institutions are selling all the way through here. All right, here's somebody who doesn't use the SPY super system and is perhaps suffering from FOMO, or they're looking at their P&L and it's going against them. And this is basically a picture of what emotional trading looks like to people. And it's very stressful. If you don't have a good methodology to follow, then you can get stressed out just to the max. And this is not a good way to trade. And without the proper methodology and the proper systems that you can use, not knowing when the institutions are in the trade, this is what you're going to be suffering. And it ends up with people giving up and blowing up their accounts. And this is somebody who's actually got the SPY super system and who is trading with high probability trade setups, is actually making money consistently. They feel pretty good about it. I don't get that celebratory, but it's important to understand that we want to keep as much emotion out of trading as we possibly can. All right, process precedes results. I just want to run through this quickly. The reason I point this out is you've got to learn the process, how to use the indicators and what high probability trades are. That process needs to be learned before you're trying to figure out if you're making money or not. P&Ls, if you're trading on your P&L results and thinking that's going to tell you that whether you're a good trader or not, or whether you're going to be a successful trader or not, it's going to end in failure. If you don't have this down first, if you don't have a methodology and a strategy that's consistently profitable and is proven to be, then you're going to end up following your P&L and you're going to get trapped. There are plenty of bad trades that make money. And it's probably the worst thing that can happen to a trader when they put on a trade that's very technically bad. They make money on it. Now they're reinforced that they can take that trade and they're going to get clobbered on it. So it's very important because you can have good trades that go bad. We have losing trades. Every month we have losing trades, but they're good high probability trade setups, and it generates profits for us in the end. We have about an 85 to 90% win rate month after month. So again, obviously that's a good win rate, but that still means you can have 15 or 16 or 17 losing trades out of 100. So you're going to have losing trades, but you do not look at your P&L. I don't even look at it all during the day. I think one of the best pieces of advice I got when I started to trade was treat it like a video game. You've got a chart that's got a bunch of candlesticks on it, these red candlesticks, and there's a bunch of other retail traders doing the same thing. Become better at it. Have a good system, have a methodology, know when the institutions are in there, and just focus on those, the technicals on those. All you want to do is become better at trading those candlesticks, just like a game, than other retail traders out there. And it should might be pretty well. It keeps me from watching my P&L. All right, this is an OODA loop. I just throw this in here. This is an informational thing for anybody who's interested. It's called OODA, Observe, Orient, Decide, and Act. This is what military uses, a lot of corporations use. You can use it in your trading. It's basically just a mental process you go through, which is observe, which you use your scans, your watch list, and any kind of important news that's actually identifying an individual stock from the company. Those are how you find your prospects. And then you orient. In other words, you identify whether the prospect meets the high probability criteria on the daily and 5-minute chart, identify support and resistance levels, know the next earning date, and check the option chain for pertinent information. Right, so you're orienting yourself to that trade. So you find 3 or 4 trades, then you look for the best one, then you make a decision. Make a decision on whether this trade qualifies as a good high probability trade setup. If it does, and it's the best one you can find, make the trade. Try to avoid analysis paralysis. Once you've gone through the process and with the methodology we have here, they're going to be good trades. They're not all going to work, but they're going to be very good trades, and they have a high probability of working. All right, so and this is just what I call a high probability trade setup funnel. This is, again, this is virtual. This is a thought process I go through. When I look at a chart, I want the daily chart to be bearish and bullish if I'm going long and bullish if it's going short. All right, I don't want to trade against the daily chart unless I'm just doing an intraday quick 5-minute type scalping trade. Trade with the trend if there is one, market and stock trend and the market trend. And then this is the key right here. The SPY super system must align. If you're taking a trade, it's going to be may become a swing trade. You may hold it all day or for 2 days or 2 weeks. The SPY super system has got to tell you that the institutions are in that trade for long or for short. This is a deal breaker right here. If this doesn't match, you can't take the trade. And then you look for relative strength and relative weakness to that stock. In other words, you got 3 or 4 good stocks. Which one is outperforming the SPY by the most? Use that one. And then enter near support and sell near resistance. This is the whole probability that we go through. This is what, if you follow this, this is going to work for you. And this is, I just wrote this out, so some people want to see these things written out. But again, SPY super system indicators must align in the direction of the trade, and the stock to be traded should have a daily and 5-minute chart aligned if you're going to swing it. And when I say swing, I'm talking about a trade that's going to be on for 4 or 5 hours, not a trade that's going to be on for 3 or 4 candlesticks, 5-minute candlesticks. That would be what would be considered a scalpy type trade. And we do a lot of those, but the methodology is different. All right, it should have relative strength and weakness to the SPY. And again, when you're taking a stock long, make sure it's above the VWAP on the 5-minute chart. And when you're taking it short, make sure it's below the VWAP. Otherwise, you're trading against the institution by definition. And have patience. In the room, these are the strategies that we use in the room and on the alert service. We do straight calls and puts, of course. I mean, that's pretty standard. We do straddles and strangles. I don't know if you're familiar with these are, but they're non-directional trades that you're looking for a big move either way. You don't care whether it's up or down. Now, you don't do it over earnings, but we got something else for over earnings. But this is straddles and strangles. They're again, non-directional. We use debit spreads using weekly options expiration. Debit spreads most people use, they go out 2, 3, 4 weeks. We just use current week's expiration. It has the best ROI. We do time spreads over earnings. We just did time spreads this week on a stock. I wish I could remember which one it was, but it worked out well. We made about 25–30% on it on time spreads over earning. This is non-directional. We're just trying to capture what's called the volatility crush. Before earnings comes out, the market makers increase the price of the puts and the calls because they don't know what direction the stock's going to go and they don't know how far it's going to go. So they increase that to protect themselves. That's called volatility. Once the earnings come out, they take that extra volatility out of those options. It's called volatility crush. The time spreads methodology we use, sometimes called the calendar spread. This is what captures that volatility for us. We have another method called the weekly ATM strategy that we use. We did this on Alcoa not too long ago. We made about 38 or 40% on that. Basically, all you're doing in this particular strategy is selling puts against a neutral to bullish stock every week. Meanwhile, you're holding a much longer term dated put out like 2 or 3 months in the future at a lower strike price to protect yourselves and lower your margin costs. This is a really nice strategy when the market is in agreement for it. All of these strategies depend on what the market's doing. Then we do credit spreads to capture premium over a few weeks. Just did one of these on Microsoft recently. And then on Netflix too, I just did one on Netflix this week. And then we do the SPY super system. Now, this methodology here we're going to cover. This is just for 5-minute charts. This is just for high probability trades on the SPYs, the Qs, the IWM, or futures, for example. These are very quick trades. I can't post them. I can't alert on them, but I have a methodology that you can use. I have a video on it, how they work. I do identify them when I see them setting up during the day, but I've got a lot of traders that this is all they do. They get the SPY super system. They just trade high probability scalping type trades all day long. And you can get a lot of trades in this, but you just have to wait for specific setups. And I'll show you the results I've had with this. I can't tell you what kind of results the traders get with this because I can't post them and I can't alert on them. But I know there's lots and lots of traders are doing extremely well with this methodology right here. Okay, the alert service, by the way, is designed for day trades and short-term swing trades. It's not designed for investments. Designed for traders who can't or don't want to watch the market all day. We put out real-time alerts on the highest probability trade setups. And that, of course, high probability trade setups are done by identifying institutional involvement, market internals, and then doing some additional technical analysis. Those are the trades that will go out on the alert service. I don't send every single trade out in the alert service that we take in the room, because some of them in the room are only going to be in for a half an hour, and that's too quick to send out for an alert. Or I take them at 3:45 in the afternoon, just before the market closes. But most of the trades will go out on alert, but not all. Okay, this is my equity curve for this year so far, based on $2,000 per trade. This would be the room trades. Pretty good. We had a really good July. You can see that big run up in July. And I'll show you the results here in a bit. All right. So now that I've kind of introduced you to the SPY Super System software that runs on Thinkorswim and how our methodology works, I'm gonna go over Heiken-Ashi candles, because I have a lot of requests for this. People want to, may have heard of it but haven't used it. Anybody in here using them consistently right now? Heiken-Ashi candles to improve their trading, because I use them quite a lot. If I'm looking for a swing trade, for example, a lot of times I'll look for a Heiken-Ashi reversal candle to identify the entrance to that, and I'll show you some of those here in just a minute. All right, so using Heiken-Ashi candles, this is what they look like. All right, very simple. Doug, you're experimenting with? Okay, thanks to me. Thanks, Doug. Appreciate it. This is British pound, Japanese yen. This doesn't matter. This could say gold. This could say Tesla. This could say Microsoft. This could say oil. This could say anything. It doesn't make any difference. It's the structure of the candles that make Heiken-Ashi candles, right? A bearish Heiken-Ashi candle has a flat top. They always have flat tops. Heiken-Ashi candles have flat tops. See how these flat tops, one right after another, all right? Now they look like regular candles, but notice that each candle starts at halfway point of the previous candle. I always do this because of the way that they're calculated. So this is a bearish trend. This is a bearish Heiken-Ashi trend. You're getting one flat top after another all the way down. Now, this momentum seems to start to fade out a little bit. You notice you start to get wicks and tails, and then you get a big wick and a big tail here on a green candle. So you know that the downtrend is likely coming to an end here. The question is, do I want to switch over to bullish here? Because maybe this is a level of support and this is where you're looking to get into the trade. But what you're looking for, and this is something I want to point out, because this right here is a bullish candle. The bullish candles have flat bottoms. So you're going from flat tops to a flat bottom. So this is a bearish trend to a bullish trend. But caveat I'm going to tell you, and this trade probably would have worked. You could have got in here and there's a flat bottom, still keeps going up. But what you want is when the reversal occurs, you want the Heiken-Ashi reversal candle that is indicating the reversal to be as big or bigger than the candles that were in the original trend. This is not as big as these candles. All right. So it's important that this reverses. So I wouldn't have taken this here. Now, somebody could have taken this and made a little bit of money on it, but it didn't go up very much. And then see it reverse back down. It's a bearish reversing candle, right? But since I'm trying to get in this long, I don't even pay any attention to this. This is the Heiken-Ashi reversal candle I'm interested in right here, right? See your wicks and tails, flat bottom right there, and then another flat bottom here. This is the Heiken-Ashi reversal. This is a candlestick I would have come in on, right there. Heiken-Ashi reversal to the bullish side, and notice how you get candle after candle after candle with flat bottoms on this. This is a nice trend. See how you can identify the trend? There's no choppiness. Now we start getting wicks and tails on one candle, but still green, and then boom, we go up again. We would be following some sort of a support level going up. Green again. So here's more flat bottom candles. That's a nice Heiken-Ashi bullish trend right there. This is where you get out. All right, you got a red candle, you got wicks and tails, you had wicks and tails here. When momentum is starting to fade, you take it off right there. Right, that's a Heiken-Ashi reversal that you're looking for. Heiken-Ashi bearish right here, the flat tops, flat bottom, Heiken-Ashi bullish, and big size candle, as big or bigger than the ones that created the original trend. All right, so that's a Heiken-Ashi reversal. This is the most important use of Heiken-Ashi candles, in my opinion, because if you use them, you're going to be able to get into a trade very early on. Right, if you're right on support, right here, for example, the VWAP is here or something, and you take it right here, you're going to be getting in really early, so your downside risk is tiny, because if it breaks down the next candle, you're out. But most of the time, when you get a Heiken-Ashi candle like this, you get multiple ones. They typically will stack a little bit. Okay, so this is the important thing about Heiken-Ashi candles. Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. Okay, they always do. If there's a wick in the tail, it may be constructed as Heiken-Ashi, but it's not a reversal type candle. So bullish Heiken-Ashi reversals are identified by flat top Heiken-Ashi candles, followed by flat bottom Heiken-Ashi candles. Now they don't have to come one right after the other. They can be a bunch of doji candles mixed in, as I showed you back there. All right, right here, we got a bunch of candles that really don't show much of a trend. This is where the trend reverses it and heads back up again. All right. So those are how you look for Heiken-Ashi reversals. That's a critical thing. That's all you really need to know about these Heiken-Ashi candles. And you can just put them on your charts. They're just a candle structure, just like anything else. You just switch from regular candlesticks to Heiken-Ashi, and I'll show you how you can do that on Thinkorswim on our platform. So Heiken-Ashi candles, just for introduction to information on it, they evolved from Japanese candlesticks, obviously. They combine open close data from the previous period with the open, high, low, close data from the current period. That's how they're constructed. That's why they always start in the middle of the previous candle. And again, the fusion of this minimizes market noise, providing a clearer depiction of the prevailing trend. If you're in a trend, if you're trading and you're trading on a 5-minute chart, I'm sure you've seen lots of little 5-minute candlesticks, regular candlesticks that scare you. You're in a bullish trend, you get this big red candlestick, and you start to panic. All right, this thing's reversing on you. If you keep it at Heiken-Ashi at that point, you're not going to get nervous about this until you get a reversal on the Heiken-Ashi, not just a regular candle. All right, so it minimizes the market noise, identifies a trend. It means average pace in Japanese. Okay, so that's kind of the introduction to that. And just as this going to just recap what we talked about, flat bottom candles. This is the trend we just looked at. Here's the flat top candles here, they're bearish. Here's a reversal right here that we talked about, but it's not big enough, right? And then we get a big reversal right here. Now, if this was your VWAP, for example, this blue dotted line, if this was your VWAP and you were looking to go long above the VWAP, and you get a Heiken-Ashi reversal candle, this is where you take it right here. As the Heiken-Ashi candle breaks through the VWAP, and you take it long right there, and that would become your stop. And you notice you get a little red candle in here, but you're way away from your stop, and then you start with more Heiken-Ashi candles heading up. That's a trend that you're in, and that's giving you the impetus to get into the trade. And here's where you get out, obviously. Here's you're going from flat bottom candles. You could have got out right here probably. It just depends on how much profit you want to take, but it continued. But you definitely want to get out as it reverses back down right there. Okay, hopefully that's very clear to what these Heiken-Ashi candles, how they're used. I'm going to show you some live ones there in just a minute. Okay. All right, so again, we've covered this, the distinction of the Heiken-Ashi candles, the recap of the advantages of the Heiken-Ashi candles, and I'm going to show you some real charts with them in a minute. It smooths out price action, reducing noise. It makes identifying trends much easier, right? Keeps you from getting shaken out. Improves identifying confirmation of trends or trend reversal. This is the biggest thing I use it for, is identifying a trend reversal. And helps identify potential exits when the candle bodies shrink and reversal occurs. I typically go back to using regular candles when I'm going to get out of a trade because I want to catch the momentum loss more quickly. But I've been in the trade and I've got profits on it. Now, this is obviously important to use Heiken-Ashi candles, but keep something in mind. You're only going to be using these on your high probability trade setup. You don't want to be using these just willy-nilly on any kind of stocks because you're going to get Heiken-Ashi reversal candles on crap stocks too. And so you want to find the Heiken-Ashi reversal on the good high probability trade setups because they're much more likely to work. All right, so this is just a graphic of Uber. I just want to point something out here. These are standard candlesticks here on Uber. This was back on May 2023. Doesn't really matter when it was. But I want you to see here that this is May 1st. These are regular candles. Here we get a gap up and a gap up and a nice movement up, right? And these are standard candlesticks. So whether you take this or not, it gets a little tricky with regular candlesticks because it's if you get a big gap like this, it's really hard to try to take it. But here's your Heiken-Ashi candles. Here's May 1st. Look at May 1st, right? This was May 1st right here. right? Here's May 1st. This is giving you a Heiken-Ashi reversal to the upside right here. This would be your entry on that day that candle was being created. And once this Heiken-Ashi candle with a flat bottom is created, once about 12 o'clock or 1 o'clock in the afternoon comes, it's not going to reverse. That flat bottom is still going to be there even if the stock price comes down a little bit. So it's going to tell you that this is a stock you can get in on May 1st. So this is where you would take it. And you see how you had another Heiken-Ashi, bullish, 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 right up to here where you start to get some sideways motion. So this is where you would take the trade on a Heiken-Ashi candle, May 1st. May 1st. So let's go back to see May 1st. This is where you would have taken the trade right here. Right? That's May 1st. That's where you would have got in on that trade. This is what you would have caught on this run, right? By taking that Heiken-Ashi candle, right? So it really kind of highlights how this. Notice, by the way, there's no gaps on Heiken-Ashi candles. It does not. It doesn't indicate gaps. The gaps are in the regular candles. Heiken-Ashi doesn't have gaps because it's using multiple candles. Okay. Now I'm going to take a look at some Heiken-Ashi reversals from Friday. This is going to be on the daily chart. Now I'm going to look at two charts. I'm going to look at our SPY Super System charts first. Excuse me here. All right, so this is the SPY Super System live right here. This is what it looks like on the swim. This is the 5-minute candlesticks on the futures. All right, this is the futures right here. Notice you've got your momentum, right? You've got your current time frame momentum, multi-time frame momentum trend. All right, VWAP is probably way away, yeah, way up, way down there. So this is a 5-minute chart. What I'm going to do is I'm going to switch over to a daily chart and show you some charts for swing type trades based on the Heiken-Ashi reversals from Friday that may be good. And we're going to look at them on here and see what they look like. Okay, so the first one I'm going to look at is RPRX. All right, this is RPRX. So this was a Heiken-Ashi reversal right here. Right here. If I go to Heiken, let me change this Heiken-Ashi candles. By the way, this is how you change it. You just go to chart candle type, from candle to Heiken-Ashi right there. Right, see, this is a Heiken-Ashi reversal candle. See that flat bottom right there? But notice something about the SPY Super System is telling us right here. We've got bullishness in our current time frame momentum, but we've still got bearishness on our multi-time frame momentum. Very dangerous to take that. That's a good technical setup, but this is telling me that the institutions aren't in there in force yet on 3 days and 9 days. This is a 1 day. The 3 and 9 days is not reflecting that yet. So this I wouldn't take this trade on RPRX. All right, so let me go to one more. I can read my writing. Oh, ASTS. And yeah, this is ASTS. Now this is another Heiken-Ashi reversal, which also looks good, but looks bearish right here. All right, so this is a technical setup that's going to look really, really nice. But you've got to be aware of the fact that this is still red right here. So it's not going to give me the highest probability setup. Now I'm going to look at these on TC2000 in just a minute. Here's snow. All right, snow is a Heiken-Ashi reversal right here. Notice we've got current time frame a long time, a multi-time frame, and we just went over the current time frame. This is a trade for Monday right here. Snow. All right, this is SNOW. This is a Heiken-Ashi reversal candle. If you've got a pencil, write it down. This is a trade that if it opens green on Monday, this is an excellent SPY Super System trade and for a swing. All right, it's beautiful, a beautiful setup. Let me show you my TC2000 chart on it very quickly, just so you can see his snow. See this big gap up here on earnings, and then this technically how it pulled down. On my TC2000 chart, I have the 8 exponential moving average right here, which I show you these in the room. And then this is see this bounce right here. You see it's got bigger volume. The volume is increased. That's why this is blue. Volume's increased and it's breaking out. That's a very good setup for Monday for a high probability trade setup. No question about it. It's really, really good. The candlesticks on my TC2000, I paint them blue for bullish candlesticks, or basic green candlesticks that have compression breaking, and I paint them pink for bearish candlesticks that have compression breaking to the downside. All right, so this is snow. Right? That's a beautiful one for Monday. And then CDE is one more I wanted to look at. Here's CDE. Beautiful, beautiful. This is a really nice chart. You see this beautiful trade. This is a mining stock, but moved up. But see here, we got Heiken-Ashi reversals, or Heiken-Ashi candles, then a couple of dojis, and now a Heiken-Ashi. This would be considered a Heiken-Ashi confirmation. It's confirming the uptrend is back in trend again. This is where you would take CDE on Monday, and let me show you CDE on TC2000. Right, this CDE. So this is see this beautiful trend. These are the kind of charts you want to see. It's nice, consistent, grinding up stocks like this. And then we go to a Heiken-Ashi reversal candle right here. All right, we had one here, it went flat, and then it had one here. This is confirming we're going again with bigger volume. CDE, write that one down if you want a good stock for Monday morning as a potential long. Both of these are on my watch list for Monday morning. All right, so those are bullish ones. Now let's take a look at a few bearish ones. All right, here's LYB. Right. So here's the LYB chart. See, we got Heiken-Ashi reversal here, then a couple of dojis. Now a Heiken-Ashi confirmation or continuation to the downside. A beautiful short stock setup for LYB short for Monday. All right, and PayX. Take a look at PayX. PayX been very bearish, doing some compression. Now it's breaking down again. Heiken-Ashi reversal right here to the downside. So that's another nice short. Notice that the institutions are selling. They've been selling the heck out of this thing since way back here on the 8th. All right, so been very short. Honeywell, another one. Heiken-Ashi reversal to the downside. Again, these are continuations. See, here's the original Heiken-Ashi reversal right here. If you caught it back here, this was the perfect entry right here. Again, we don't use the VWAP on the daily. Here's the Heiken-Ashi reversal. This was the actual original trade to get into Honeywell. Notice how it went yellow right here, and the multi-time frame was red. This is a bearish trade. Bearish in the daily, the current time frame, bearish in the multi-time frame, bearish in the trend. This is where you would have entered the trade, and you'd still be in the trade for a swing trade if you wanted to stay in it. You could have taken profits along the way. And now we're getting a confirmation that it's going to continue to the downside. All right, that's on Honeywell. And AAP, one more. Heiken-Ashi reversal to the downside. Can we take this? We cannot. See, the buying has been too strong for the institutions. This isn't enough of a confirmation that we're going to go down. So I would have to wait for that to confirm before I did that. All right, so this is AAP, and this is what it looks like on TC2000. Right, this is my regular chart on TC2000. Here's my Heiken-Ashi chart. See, but that is a Heiken-Ashi reversal. So I say, well, it looks pretty good. Then I look at it on my SPY super system, and I say, I can't take it. I can't take it. You know, unless I've got some other reason beyond just technicals to take it, I'm not going to take that. All right, so those are Heiken-Ashi candles. Now, let me switch over to the SPY on a 5-minute chart from Friday. All right, so what we want to look at here is we want to look for some trades on the SPY super system on Friday, how the market was going. Where can we find some entries here? So here's our VWAP right here. All right, and here's our current time frame momentum. This is the only thing we're interested in right now. All right, just current time frame momentum, because we're just going to be taking this SPY for a few candles. So where would we take it? Well, here it is coming along the VWAP right here. All right, and still on the VWAP. Here it breaks, but this is where you take it. See how it breaks below the VWAP right there? All right, and it's gone to red. So you've gone from buying to selling. You can take it right here, and now right here, you get a blue candle, but it's just a doji, and you're still below the VWAP. When you get into the trade, you're taking the trade at the VWAP. This is your entry right here at the VWAP. So you stay in it because the VWAP is still support, and then it starts to move away further, and now the 15, which is the little red line, becomes your support. So this trade you would have taken it from here, and you would have get out right here as it turns green and heads back up again. That's just SPY super system trade right there. That's a beautiful trade on the 5-minute chart on Friday. All right, and here it is coming back up again. Anybody who is bold could try to take this as it goes above the 15, but your resistance was the VWAP right there. Moved up nicely. See if we can find any more. Not really, pretty hard to tell because we do have bullish and then bearish right here. But we're coming right up on the pivot point. See the white pivot point? I can't take it. All right. This one I could take. Right here, we're breaking above the 15. We got a pop out of the box symbol. We just went from selling yellow, bullish buying. You take it right there, and you just ride this thing up. All right, that was a nice trade. I actually took this trade on Friday. All right, a nice buy trade, and then you start to flatten out right here, and you get out, and it went back to yellow at the end. But that's how you can use it, and you can use it on the SPY, the Qs, the futures. I can use it on ES or NQ or RTY, and you can even use it on stocks for quick 5-minute trades. Again, this is SPY Super System methodology for just 5-minute trades using the current time frame momentum. Okay, and so again, this is what the system looks like, and the Heiken-Ashi candles look like. This is the SPY Super System with some scanners in here. This is a relative strength scanner, relative weakness scanner, swing trade scanner. We have several scanners in the software that you can get. All right, so that's Heiken-Ashi candles. All right, and I'm going to now look at any questions here on these Heiken-Ashi candles. Hopefully you can see how effective they can be in helping your trading. Obviously, you still have to have high probability trade setups, but they help you with your entry and exits on them. Okay. All right, so we're going to take a look at the results that we've had in the room overall, and then some details by month. This was the 2003 trade results using 2,000 per trade. Now, I always use, for my calculations, I always use 2,000s per trades because I have to have something that I can use all the time to have a basis for. So this is my base case, 2,000 per trade. Obviously, not everybody's doing that. Not everybody's putting the same amount into a trade. You know, I put more money in trades on trending days than I do on choppy days, but I have to have something to use. So I used to use 2,000 per trade on all the trades we've taken. This was our results in 2023. In all the trades taken in the room, produced a little over 60,000 in profits. In 2024, produced about 55,000 in profits, a little bit less. But again, the profitability is, a lot of it's based on what the market conditions are. Trending markets are much easier to make money than choppy markets, as I'm sure if you trade, you know that it's very difficult to make money in choppy markets. A lot of times you have to cut your profits off pretty quickly because you can't afford to take a reversal on choppy days. All right, there's something I just put in here. This was back in April when they put the tariffs on, and then the next day or the next 2 days later they took the tariffs off. We were in only 4 trades in that particular time. We were in these are the trades we were in. I don't know how this got shifted like that, but we were in Broadcom or ABGO short. And by the way, the SPY was down 10% in 2 days. These are the only trades we're in. We're in all of these on the alert service and in the room. We get into Broadcom. We get in for $75 a contract, and we close it for $1 for a contract, 39% profit. Nike, huge winner for us. This is the biggest winner of the year. It happened because Nike makes their products in Vietnam, and the tariffs were going to put a 39% tariff on Vietnam, tanked the stock. We entered at 285, not because we knew this was coming, but because the institutions were selling it. We knew they were. We could tell by the SPY Super System. So we took this trade at 285 a contract, right? And we closed it for $9 a contract, 216% profit. That's the best trade of the year, and it produced $4,300. We had Sept as well, in at 450, out at 8, and that produced $1,400. And NNE in for $1.80, out for $225, produced $495 profit. So that was what we had. Those are the only 4 trades we had at that point in time. They were all bearish at the time. We got lucky on Nike, but still, while the market was down 10%, you can see what we were up. So we don't really care if it's a bear market or a bull market. It doesn't make any difference to us at all. But that was a really nice series of trades. All right, current months. I want to bring you up to date on where the current month's profits and trades have been. And I want you to notice something on these results. Notice the percentage gains that we get. We're not getting 100, 200, 300, 500%. And I'm sure you get lots of invites for webinars and newsletters and stuff, and people tell you that you can make 200, 300, 500, 600% consistently. You can't, right? Regardless of what they say, you can't do it. Making money in the market is very methodical. You have to have a structure and a strategy, and this is typically what we make: 20, 23, 25, 17, 42. This is the kind of percentage gains that we get. This was June, and I was out for a couple of weeks, so we didn't take a lot of trades. We had 11 trades, 10 wins, 1 loss, 91% win rate. Still produced about 3,790 in profits. All right, July, I did a lot of trades. I guess I made up for being on vacation. I did a lot of trades, but notice the percentages here. 40, 20, 32, 52, 21. Had a loser here in AA for time spread. Had Snow a loser right there, 14%. And VST, we got a news event that knocked us down 100%. But these are the percentages of all the trades that we made that month. All right. So these add up. These add up because what in July we had 33 trades, 30 wins, 3 losses, 91% win rate, and 2,000 invested in each trade produced $16,829. Best month of the year. That's a very, very good month right there. And those are the trades. But again, these aren't big, massive gains. You can see that they're just consistent. August, we had, I didn't list every single trade in August. We had 20 wins and 4 losses, 84% win rate, 59.60 in August. Not bad. September, this is the current month. I just updated these this morning, as a matter of fact. For the first 3 weeks, we've had 12. That's not right. It's 14 and 2. 14 and 2, I think. Is it? Oh, that's right. No, 12 and 2. I'm sorry. I did upgrade that. 12 wins and 2 losses. And here's all 14 trades right here. 86% win rate, 2,000 invested in each trade. Has produced about 3,000 in profits. And we were up quite a bit more. We took a couple of losses at the end of the week. Here's VSAT right here. You know, we had some sort of a news event that we were coming up on expiration, knocked the trade down. Didn't have too much chance to adjust it, but I lost 89%. We're going to get some of those occasionally. VST, we lost 56%. This was an intraday trade. But the rest of them, you can see the percentages. Again, they stay right around where we want them to be. This was at weekly ATM, 33%. But again, so we're still up, even with those big hits, we're still up $3,000. And so, again, I've only had 1 losing month in the last 2 years, which I'm going to also show you. All right, so there's where we are up to date right now. Going back to 2024, and I keep all these on here. I probably should just take some of these off. This was just really meant to show you the percentage gains and how consistent we are month after month and week after week and trade after trade. See these trades here. We did have 2 losing trades in January of 2024. Still 90% win rate. We had Gilead here down for 175, 105. February of 2024 right here. Again, 20 wins, 2 losses, 92% win rate, 11,700 profit. You can see that consistently 0 to 40%, 25%, 56, 11, 32. This is what you see trade after trade after trade. And the alerted trades too made about 7,000 that month. All right, this was May, just jump ahead. We did a lot of time spreads in here. I had this up here because I was showing how the time spreads work. But again, we had some nice trade time spreads in May. We had 29 wins, 7 losses, 81% win rate. That's a little low, but still $5,700 profit. This is what matters. There's June, again, 24 and 4, 75.90. July. So again, you can see this. I don't have to repeat every single month. And you're going to see these month after month. The profits are very nice, very consistent win rate, very consistent profits here. Okay, this is what's generating our cash. And remember, we're finding these trades by identifying SPY super system trades when institutions are in the trade. That's how we're finding these. That's how we're getting these results right here. All right, and this was in August, 17 and 2, 89% win rate. September, this was my losing month last year. All right, so we had 8 wins and 5 losses. To me, this is embarrassing. All right, 62% win rate. It's probably the lowest I've had in years, but it is what it is. I had some losses in there. We lost $17.86 in the room and $295 on the alert service. Not too bad, but you know, we see in August we had made right 4,500, and we lost 17, and then we popped up in October, and now we made 74.48. The room was 17.3. So again, the methodology works, the strategy works. You're going to have losing trades. I try to be transparent about this. I want everybody to understand that you're going to have a losing month every now and then. It's pretty rare. This is 1 in 3 years, but still, you're going to have some losing trades. There's no way around that trading. You have to be able to keep your risk to the point where you can afford to take a loss. One thing I will mention about the trades that we take, all of our trades that we take are all risk defined, or the maximum amount you can lose is defined by how much you put into the trade. So they have a defined risk. You can't lose any more than you put into it, which is not the same with futures. All right, something like futures, you're margined pretty heavily, you leverage pretty heavily, and you can lose more than you put into the trade if it goes against your heart. We can't. All of our trades are again defined risk. All right, so and then we went to October and November, and I won't keep going over these. We just have you've seen the results that we've had. This was this year starting. I wanted to just kind of show what we were doing January, February, March, April. 84%, 89%, 83%, 85%. Win, 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 win. Again, the amounts vary, but the wins consist. All right, I just want to show you those results. And remember, these results are coming because we have the SPY Super System software that shows us if the institutions are in the trade. Or here's just for anybody who's interested in the alerts to know what they're going to look like. When you get an alert, this is the Nike trade, the big one we took. We put it out on 3/28. The first alert you got would have looked just like this. Date, ticker, Nike, buy the April 11th 67 puts for 285. That's all you would have got. Then once we decided we were going to go ahead and try to take profits, you would have got this alert again, except it would have said sell order after that. And then once we closed it, you would have had another alert with the whole trade saying they were sold for $9 on April 3rd. Okay, that's what the alerts look like. So again, it's the stock symbol, the option strike price, the auction expiration date, and the price to pay for the option. And you'll always get an alert to tell you when to get in and what to sell it for. And this, you could get another one. If we couldn't have got 9, you might have got another one that said sell it for 850. We had to adjust it. All right, so that's what the alerts look like. How do we achieve these stunning results? I think we probably know by now how we achieve these stunning results. We're able to identify when the institutions are driving a trade and when the market internals are heavily bullish or bearish. Okay, and we only take trades when both of these are in our favor, allowing us to align our trades with the institutions in the market. I will say I do trade sometimes if the market internals are neutral, but the institutions are in my trade, I'll take the trade. Okay, as long as they don't have the market internals going against me. All right, and how do we do it? I think I've talked about this. You've seen the system. We do triple screen assessment, multi-time frame assessment of momentum, trend, and money flow. This is the key one here, momentum. I will say it's important to understand what momentum is. Momentum is not just a stock that's moving up with green candlesticks. A lot of people think just because a stock is got green candlesticks, it's got momentum. Like if you're in a car and you step on the gas and the car starts accelerating, it's got momentum. Stocks are different. Stocks momentum is identified by looking at the close of the previous candle compared to the high of the previous candle, and then looking at the close of the current candle compared to the high of the current candle. If the close of the current candle is getting closer to the high of that candle than the previous one, and then you keep getting repeated candles like that, where the close of that candle is closer and closer to the high, that's momentum. The price is moving up, but it's also getting closer to the very high of that particular candle. That's how momentum is calculated. That's how it's identified. All right, so here we go. We've seen this one before. I'm going to run into some trades, into some charts. We also do, by the way, this is a normal template that we've got. This comes with the SPY Super System. If you get it, it comes with this one, with the scanners and everything we looked at. We also have another one that that comes with it. You can flip them back and forth. This is just for SPY Super System trades that are going to be trading off the 5-minute chart. Scalping type trades, trading the SPY, the Qs, the IWM, the futures. It just has the current time frame momentum because that's all you really need. It doesn't have the other indicators. It does have the VWAP, the 15, and the pop out of the box symbols on there. All right. So this you can have both of these. You can switch them back and forth during the day, however you want to do it. But it just it just takes some of the noise out of the actual template. All right. So this is a SPY Super System trade on the Qs. This was a high trade, a high speed trade, basically a high probability trade off the Qs. This is where we took the trade. How do we know? Okay, here it is here. See, it's breaking down with a pop out of the box. Well, it doesn't have a pop, but it's breaking below the 15. But it went from buying on the institutions, green, to yellow, right here. That's a sell. The institutions are selling it. We take it here. We use the 15 EMA as our stop because that's where we're coming below. We stay in this, we stay in this, we stay in this, we stay in this, we stay in this. Again, just keeps on going. I don't even know how far down it went out, but this was a massive trade, a massively good long trade. There'd been no reason to get out because it stayed below the 15 the whole way down, and the current time frame momentum stayed bearish the whole time. All right, that's a beautiful one right there. Now the SPY super system, which this was, when I say the SPY super system methodology, that's trading a 5-minute candlestick. Everything uses the SPY super system charts, but this is a methodology on a 5-minute chart. All right, using the SPY super system, this is what I mentioned before. I can't post these and I can't send them out in alerts, but I do use this methodology of trading off the 5-minute candlesticks, and these are the results that I've had since a year ago, July. All right, lots of trades. You can see in August last year, I had 56, 6, and 2. But that's using the SPY super system with this type of a setup. You've got to have the institutions going in. You need to have a break. You got to come in close to support or resistance. That's the key. And these are what the results I produce. Most of these trades are very quick, 5, 10, 15, 20 minutes. That's it. So you're only going to have one trade on at a time, and they have to be short duration, and you've got to watch them. So you got to be able to watch these trades. This is not for everybody. This is for people. I mean, I actually did this because I had people that wanted to be able to take a lot more trades, who like to take quick trades, and I came up with a methodology that using the SPY super system that would do that for them. All right, again, this was November, December. I haven't had a losing month in these trades. Again, October of 2024. This is the SPY super system trades. This is the room. This is this is the results I got. This is the results the room got. If you were following the trades in the room, you would have had similar results to this. I can't tell you what you would have got with this because I can't post them. They're too quick. This is what I had, but these two totals are completely different from each other. This is not included in this. This is not included in this. These are two different methodologies with two different results. This is the ones we alert on in the room and call out the room. This is the ones that I take, and I try to identify the ones when I see them. All right, so they're fairly quick. And there's November, again, good months here. And this was the last quarter last year, 2024 last quarter, October through December. The SPY super system had an 87% win rate, produced 24. 86% win rate in the room, produced 17,774. But look at the number of trades taken. 156 wins, 24 losses on the SPY super system using that current, just the 5-minute candlesticks, and 44 and 7 in the room. Which these are ones that are alerted. These are much more swing type trades. These are very quick trades. You use the same software for this. Okay, so here's the SPY super system trade. Again, just to show you again what they look like. Here is the SPY super system. Notice this is the current time for momentum. This was an old template before I put the actual indicator on there. This had a thing called confirmation. I don't use that anymore. But here's the key thing here. Current time frame momentum. That's all we need for this. See, it breaks. See how it's blue. It went from red to blue, selling to buying. Breaks here with a pop out of the box. You take the trade right there as it breaks above the VWAP. You stay in it. Now the 15 becomes your stop. You ride it until you start to get these doji sandals and the red candles up here. That's where you get out. That's where I get in. That's where I get out. $220 profit per contract on the SPY super system trade. Now it's important to understand that $220 of profit is a lot per contract. You're not usually going to get those. Most of them are only going to last 3 or 4, maybe 5 candles at the most. Because in a choppy market, they reverse quickly. But we had a nice run in this particular one. But I want you to see what we're taking it off of. All right. This was another SPY super system trade. Here's just one candle, $90 profit on the SPY. See right here, pop out of the box off the 15, went to red, took the trade there. Those are Heiken-Ashi candles. Same thing here, using the new template with just the current time for momentum on there. Shows the same thing right here on here, but see it goes buying, selling right here. It breaks down right there and continues to break down. We can get out right here on the end of this candlestick. Right, and this is using a new template for a SPY super system trade right here. See, it breaks above the 15. I couldn't take it here because it was yellow. I take it here and I ride it up here and I'm out. All right, so that's how it looks like. And I just showed some examples on here of what you can see, how these things work. But this was a break. Everything was green. breaking above the 15 EMA. This produced $130 profit per contract. IWM, $90 profit. This one we had to stay in a good long time. Notice it went from selling to buying right there. Then it kind of just moved sideways, but it stayed above the 15 the whole time. And then got out right here. Another IWM here to the short side, coming off the VWAP, right there, red. IWM here, right here, you notice it went blue. As it broke above the VWAP, we take it right there. This was another big $150 per contract. That's very difficult to get that much. Again, another SPY trade here. Again, the reason I showed this, you see how it went from selling here to buying right there. All right, this is where it broke up, but notice it didn't get through the VWAP. It didn't get through the VWAP here, the pink line. This is where we would take the trade right there. Right there, it's blue. It's breaking above the VWAP. It's gonna pop. We take it right there, and we write it up. Okay. Now this one is I just showed for a reason that I took it short right here on the spike. See it's selling. This is current time frame momentum. I mean, this was not there. This is current time frame momentum. So I'm short right here, and it comes down, and I get out right here as it bounces. Then I went long right here as it bounced back up. Notice it went from buying to selling to buying right there, above the VWAP, above the 15, and I took it there, and I get out here at the pivot there. Okay, and so I'm not going to go over all of these. I just want you to see how they work. You can obviously see the buying and selling going on here. All right, so that's the SPY Super System trades. Here's some SPY trades that we took in the room. These are posted trades that I alerted on, and we took in the room. This was a line. Now this was on a 5-minute chart. This was an intraday trade, but it was still an alerted trade. And notice I took it right here as we went from buying green to selling yellow right here, right? So about 1050. As it broke down here, see the VWAP broke down here. I took it right here, and we were in this for 1 hour, and we took 51% profit in this aligned trade. It was beautiful. Notice how the institutions are selling the whole way across here. All right, let me just take a sip of water here. I'm getting a little hoarse. Okay, this was URGN. This was a nice swing trade we took. We get in right here. Notice how the institutions went from selling to buying, red to blue, still compressing. So I'm waiting for a compression break. As it breaks above here, this is where I take it on URGN. We ran kind of sideways for a while, but it stayed above 15. Took it off right here on this candlestick, 48% profit. And that's about a week. That one, we had to wait a little while for that trade. NVIDIA, another daily chart here on NVIDIA. I think I showed this one before. This was a PBO, a pullback opportunity to the 15, and a bounce right here. We take it there and get out here, 32% profit. Notice the institutions that was buying the whole way across, multi-time frame and current time frame on swing trades. Both have to be green or blue for longs. Right? This was SMR. We already looked at that one. This was Nike trade. This is the Nike trade we took right here. We took it on the 28th, right here. Notice it was. I said we didn't know that there was going to be any kind of tariffs put on, but we knew the institutions were selling the heck out of Nike, so we took it short here. Now it actually produced a little profit that day. We stayed in it, and it just went sideways, and everything stayed red. We stayed below the 15, and then we got that big flush down on the tariff news, and we were out that morning. We didn't hang around in that trade very long. You're not going to. I have a saying in the room: gaps are gifts. If you get a gap up and you're long, or a gap down and you're short, take the money. Gaps are gifts. When you get a gap and it's jumping your profits way up there, take them, because there's two reasons for that. One, most gaps don't continue. Only less than a third of the time, gaps, when they gap up, it will continue up. They'll start to chop sideways or move down, right? And secondly, when you get a gap in a stock in the morning on the options, it increases the volatility in the options because of the big move. That increased volatility increases the price of the option contracts, which means that's going to give you some additional profit as well. Right? So this has happened many times. I'd have an order in to sell based on what I thought it should pay, like $7.50, based on where the stock was. And when I put the order in, when they closed it, I got like 8 1/4 for it. because there was extra volatility in the premiums on those calls. So that's why your gaps are gifts. Take the profits when you get a gap. All right, this is Sarepta. That was another one we were short. I remember I told you it's very easy to see here that the institutions are selling the heck out of these things. All right, this was HIMS. We took this for a long. This was a nice long trade. I was kind of late getting into this thing, I think. I probably should have got it right here on this 15. Again, we don't use the VWAP on a daily chart, so I probably should have taken it here. But anyway, I didn't see it till here, and I took this and got 25% profit. I did leave a runner on and got a huge amount of profit, but I didn't include any of that in the stats I've got. Palantir, nice trade on Palantir, daily chart. Institutions, we're noticing this is an older one because I don't have the momentum indicator here, the actual oscillator here. But notice they were buying, then they went to selling here, and then they come back to buying. Meanwhile, the multi-time frame was already green. They were in it already, so this is where I took the trade. Went back from selling to buying, took it here, and made 31% profit in 2 days. Lulu, another nice one here. We took it here on this breakdown. This was an overnight trade. I took it here because you see how it went from selling on the multi-time frame to buying on the multi-time frame, blue, to selling. All right, so I took it right there and made 56% overnight on this thing. It was a pretty nice trade. In for $192 a contract, out for $300. So if you had, if you were putting 2,000 into a trade, you would have put in, you would have been 10 contracts, and you would have gotten in for 1,920 and get out for 3,000. Amazon, this was a 5-minute trade. This is a SPY super system trade methodology using a stock. Right here, it comes along with 32% profit in 45 minutes. It just ripped up. And obviously, the institutions are buying the heck out of this thing. 20% in an hour to the short side. And here's Verizon. We had 50% in an hour on this one to the downside. Right? Everything's selling here. So I think you can see what I'm getting at here as far as the institutions kind of telling you what they're doing. Because a lot of times you're going to get a lot of mixture and you're not going to have any institutions. Once you find stocks that have these, then you've got the institutions on your side. We took this Tesla overnight. Everything was bearish here. The daily chart was bearish. The 5-minute chart was bearish. This is the 5-minute chart. We had them selling here right toward the end of the day. Notice the institutions were selling on current time frame here and multi-time frame here. So we took it overnight and we got a break. We got a gap down from 120 to 112, and we took profits, nice profits on that one. Okay, so that wraps up the SPY super system charts, the indicators we use, the trade results we've had over the last 3 years, which I think I'm very proud of what we do in the room. We do a lot of education in the room. I spend all day working with traders on the trades that they like to look at, trades that they suggest, talk about the trades we take, show charts all day long. This goes on all day long, 5 days a week from market open to market close. But again, here's what the strategies we use: straight puts and calls, straddles and strangles, debit spreads using weekly options expiration, time spreads, again, non-directional over earnings, how we capture money over earnings. Weekly ATM, this is a strategy that I did for Alcoa, where we sell puts each week against a longer dated put out in time. Credit spreads, and then the SPY super system, which again, I don't post and I don't alert on. I will tell you when I see a setup, but I put it here because a lot of traders that we've got hundreds of traders, a lot of them, this is what they like to do. They like to do these quick trades on the SPY, the Qs, the IWM, or even the futures off of the SPY super system indicators. Right, and they do them every day. All right, so this is, I'm going to show you the offer here now. Again, if you have any questions on these offers, I want you to call Rory because he can help you with anything I don't have defined here. But the first thing we're talking about is the free 2-week trial. Now that's going to give you the alert service for 2 weeks, and it's going to give you my live trading room for 2 weeks. Okay, and you're going to get this what's called the Wise Way to Trade Options. This is a master class. Basically, these are training videos. There's about 31 that go over all the different strategies we use, all the indicators we use, how we use them. Everything is defined out there. So you get that for 2 weeks. After 2 weeks, it rolls over to $396 a quarter. Obviously, you can cancel anytime you want. All right. So this again gives you the all of this, and then it rolls to, like say, $396 a quarter. Now you can get the alert service for forever if you want to take the alert service, and you'll get the classes or the videos, and also get a private Discord chat access. That's for a lifetime. That's $24.96 for the alert service. If you just want that, but that's for life. And if you want to get a different duration here, just call Rory, because he'll quote you whatever you prefer. But this is the one I was really keen on here. This I thought was going to stop. I thought it was going to stop pretty soon. It will soon. This is This is my live trading room. It's also the SPY Super System software. You get the software installed in your machine with all the indicators and any updates that come along forever. You get the SPY Super System forever, the software forever, along with my room forever, plus the training videos and the Discord chat room. $24.96. This is a no-brainer for anybody who wants to be seriously trading. All right. So that's what that is. Again, you can call Rory if you're interested in adjusting any of those. And I think in the chat box here, he's got a link. Yeah, Rory's got a link to all the audience here for all the special offers. Okay, and you can call him with questions, or if you want to get into have a question on maybe a different duration, maybe a year instead of lifetime. But I want to tell you, this is really outstanding. This is the room and the alert service. I'm sorry, the room and the software. And that software is worth, to me, it's worth a fortune. That tells you whether institutions are in the trade or not. Now, I did want to point something out. I just put this on here today. I went back and looked at the last 3.5 years, and what I call return on subscription investment. So I'm marking the subscription at $1,600 a year maximum. That would be if you took the quarterly one 4 times. That's the most expensive way it would come. So that's max based on quarterly pricing. The average trade side would be $2,000. So I'm assuming you take all the trades at $2,000 a trade. I have to have a baseline. But the historical results of that, it's 40 times your ROI per year. So you're getting 40 times what you're paying for the subscription every year. So annual profits have succeeded 40 times the subscription cost. Again, the subscription has consistently paid for itself many times over, obviously. And again, that's ROI. That's simple math that shows that, and it's proven results. And of course, the disclaimer. But that shows you what we produced for our members based on what they're paying for the subscription. I think it's really a good deal. But anyway, to me, this is the one to focus on. All right. So, any questions? Anybody has any questions on what we talked about here? I know we covered a lot of material, and I hope the Heiken-Ashi section helps you out. But so, all right, good. Listen, I look forward to seeing some folks in the room or in the alert service here pretty soon. I hope you have a great weekend and enjoy your Saturday, and we'll see everybody back on Monday.